If you're an employed advisor, chances are you've thought about becoming self-employed. Maybe it's a future goal, or maybe you've put it in the too hard, too expensive basket, which is understandable. Being self-employed is hard. Quitting a stable income is daunting, it's financially risky, and the worst part is there isn't a lot of information out there about making the transition. In this video, I thought I'd go through the top questions I get from employed advisors who are thinking about making the leap. This first question isn't always asked directly, but always alluded to. Will I make more money being self-employed? This is a very topical question. With salaries for financial advisors going up, it does make your decision a little harder. I just looked at some Seek ads, and the average seems to be somewhere around the $150,000 mark. So to answer your question, no, you probably won't be making more net cash flow being self-employed in year one. Unless you're starting with a client base of some sort. However, you need to consider that you're also building a business and an asset. So when you're doing your maths, add in a basic valuation, like a multiple of 2 times on your projected ongoing revenue. This will help you do a proper comparison to being employed. Your net position after 12 months should probably be on par or higher than your employment salary when you look at both income and the value of your business, which of course makes sense. If these employers are willing to pay you a $150,000 salary, they are expecting a 2 or 3 times that off you in income and valuations to their business. Otherwise, they wouldn't do it. How much capital do I need? This is a great question. And yes, you need to do your numbers and try to get this as realistic as possible. I'll run through a conservative example. Say you can generate 2 new clients a month. That's 24 clients a year. Very achievable. Average client income of $5,000. Of those 24 clients, 15 of them sign up for ongoing service at $2,000 per year. Expenses of $36,000 per year. I'll come back to the specifics on that later. That's a net income before tax of $84,000 and a simplified book valuation of $60,000. So you've made yourself $144,000 net benefit. Looking at these numbers annually is fine, but it's the cash flow that's going to mess with you financially and emotionally. Break it down monthly. Your first 3 months are the hardest. You'll be juggling a lot of new things, setting up the business, finding your first few clients, and income can also take a while to hit your bank account. From signing a client up, to giving them advice, to receiving that income via your license and then into your bank account, it can take a little while. For this example, I'm saying no new clients in month 1 and no tangible income into your bank account until month 4. The other variable is your living expenses, like your mortgage, food, etc. I'm going to call this $7,000 per month. Based on these numbers, I'm saying you need a $15,000 buffer at minimum, and then depending on your own personal tolerance to risk and belief in your own abilities, you may need to add more or less of a buffer. Maybe your average client to begin with will only be $4,000 per client. That changes the capital you need to $24,000. I'd also allocate about $5,000 to general business setup, expenses, emails, basic website, etc. How does licensing work? You probably have a general idea about licensing, but the short version is this. You need to be licensed by an AFSL. Your company needs to be licensed, which is called a CAR, a corporate authorized rep, and you personally need to be licensed, making you an authorized rep or AR. You need to pay a licensing fee for this privilege. All of your revenue you generate will need to flow through your AFSL first, then it gets paid to you. Because an AFSL controls your compliance, controls your revenue, controls your ability to transfer clients on and off their register, choosing an AFSL is like choosing a business partner. Don't do it lightly. Just because an advisor is with a particular license doesn't mean it's right for you. Different business, different requirements. Which of course is the next obvious question, how do you choose a license? I did another video on this topic, so check out how to evaluate and change dealer groups. So watch that, and I'll try not to go over any of the same content in this video. I will just add, when you're moving from being employed to self-employment, your requirements are a little different. Keep two things in the back of your mind when you're talking to dealer groups and doing your research. Firstly, ask yourself, how will this license increase my chances of making it through my first 12 months? So ask about things like support, community, leads. Maybe you can talk to some of the advisors on their license about their first year. The second thing to consider is, what if your business doesn't make it? I know that's not very optimistic, but what will it cost if you only make it, say, 6 months? Ask about contract periods, minimum licensing fees, understand worst case scenario. How do you generate leads when you're just starting out? This is a big topic. What I will say is this: think about where are you going to get your leads from, like friends and family, referral relationships, referrals from existing clients, or proactive marketing. Think about how much time you need to spend doing the activity to generate that lead in like working hours. Like, is it a coffee a week, or is it 3 hours a day creating content? The other variable is it like a conversion over time. Like, what can you expect? When can you expect your first lead? Friends and family, not a lot of effort in your personal time. You can probably get one of these clients in your first, month or two, but it's not sustainable. Whereas referral relationships with an accountant or a broker, this takes longer than you think. You need to find them, build a relationship with them. You might need to catch up with a coffee every fortnight. Before you get your first referral, I would say allocate 4 months plus for these like business to business style referral relationships if you're starting fresh. Please don't bank on these referral relationships. I can't tell you how many times I've heard advisors struggling because the referral relationship they thought they had fell through. They met a really enthusiastic person, but the leads just never came. Referrals from existing clients are great, low effort. You just need to do a good job and make sure you're asking for the referral. But you also need clients to get client referrals. So you're probably not going to get too many of these in your first 3 months. So what you've got is a 3-month gap where you probably aren't going to get enough clients for your initial business plan, and the 12 months where your main focus is going to be requiring more and more clients. The solution is proactive marketing, which might sound scary, but there are ways in which you can generate leads, with a few hours work and get a lead within a week. Whether you're using social media platforms or just getting out there and talking to people. I'm not going to give you specific examples now because depending on your ideal client, 2 different advisors could have very, very different strategies. What I will say is this: initially, you're looking for proof of concept. Like if you send 100 emails, you get 10 replies and it converts into 1 client. You can scale that. It's not doing a Gary V and just doing a social media post every day. That's not going to work. Initially, you're not trying to build a brand. You're looking for individual responses to your marketing actions. This is probably the single most daunting area for employee advisors. I can say the line between no clients and too many clients is really small. One day you'll wonder where you're going to get your next client from. A few months later, you're going to be increasing your prices or hiring staff to help you out. I know it's cliche, but niching, even just mentally, can really help you direct your marketing efforts. What are my expenses? Okay, so it's expensive to run an advice business, and it can vary greatly depending on the decisions that you make. And again, this is obvious, but you want to try to run as lean as possible in your first year. Licensing. This one can vary the most. Do your research. I'm going to use $1,800 per month as a baseline, inclusive of PI. You might find licenses that include other things in their fees, like advice generation software. Try to break the elements down individually so you can compare apples with apples. The other factor you'll come across is the percentage versus fixed fee licensing model, or a combination of the two. Often, percentage models look good to new advisors. It can help in the first few months where revenue is low. Just do your research. I've seen good percentage models and I've seen other models that are pretty rude. Advice generation software is an interesting one. This can be $500 a month or $1,500 a month. If you're coming from a large company, you may not be able to get the exact same setup that you were using. Or maybe it's going to cost you $20,000 to set it up that way. I'm going to put this one down at $500 per month, but again, this can vary a lot. Emails, $10 a month. Website hosting, $10 a month. Business phone number, $15 per month. Digital signatures, Office 365, cloud storage, accounting software like Xero. Let's call this subscriptions, $300 per month. But yeah, be careful. Subscriptions can add up very, very quickly. An office and a business address. There are some really great virtual spaces available where you can get an address. You can even do a pay per use for a meeting room. Try WeWork, Victory, ServeCorp, to name a few. They're often very pretty, but there are some downsides. Like, you might find it difficult to create a Google My Business page. I'd try your local Facebook page or Rubber Desk. Finding a desk in a smaller local office can bring its benefits. I'm going to call this one $150 per month to start out. Paraplanning and admin support. Again, a large topic. Working out who you're going to get to use, to get an idea of your average SOA cost. Personally, I think advisors starting out with zero clients should do their own paraplanning, even if it's the first 10 or 20 clients. While you have extra time, give your cash flow a bit of a break. And admin support. This is probably going to be a year 2 expense after you've grown. So I'm actually going to put this as $0 for year 1. And everyone loves a good old other category. You might choose to spend more in some of the above categories. Plus you'll have other business incidentals. So let's call this $250 per month. And that's where I get the $3,000 per month in expenses for a single advisor business just starting out. You'll also have a few upfront costs like logos, websites, setting up company structures. You don't need to go crazy. You don't need the most perfect website in the first 12 months. People aren't going to find your website, like it, and call you. They just want to see that it exists and that you exist. As I said earlier, allocate about $5,000 to these upfront costs. But yeah, this can really easily turn into $20,000 if you start using, marketing agencies and lawyers. So yeah, watch that. How do you structure the business? Going self-employed does open you up to some additional personal liability. At a minimum, you're going to need a proprietary limited. It's also common for advisors to have a family trust that owns the shares in that business. What is really bad about being self-employed? Being self-employed isn't easy, and it's not for everyone. The worst part about the first 12 months is the income versus expenses dance. The other part is the fact that you're it. If you have a problem, you have to solve it. You're an advisor, but you're also admin, marketing, cleaner, bookkeeper. As you can grow, you can start outsourcing these things, but in those initial days, it's all you. What's really good about being self-employed? Most advisors really just want to give good advice. Sometimes in employed roles, you'll hit barriers to being able to give the advice you want to give. Being self-employed gives you more control on that advice, what advice you give and who you give it to. Not to mention the flexibility of being self-employed, which is very, very valuable. 9 out of 10 advisors I speak to, they do make it through that first year, and the common theme I get is that they wish they quit their job sooner. Anyway, that's the video on common questions we get from employed advisors thinking about going self-employed. If you have any questions that I've missed, you can shoot me an email here or check out our other videos. Thanks for watching.